fantastic.
Welcome back. Well, it was a down day for the markets. The markets did end at 2-month lows, tracking the currency fall versus the dollar globally. To discuss the market fundamentals on the show, we have with us Paul Schult, who is the founder and editor, Schult Research. Paul, hi, welcome to the show. Well, for the Indian markets, the correction seems to be more of a catch-up as compared to our global peers, both for the equity as well as for the currency markets. But what is your sense in terms of where the dollar index could go? Because that would mean more pain for the Indian rupee.
Yeah, so you know, the basic math is that the difference in interest rates between two countries is reflected in the difference in the currency. And so your previous speaker hit it on the head that you've got countries that are just not raising interest rates fast enough to counter inflation, while the U.S. is. And so that pain of not wanting to control inflation has to get taken out of the currency. So the currency absorbs the pain. The problem is you avoid pain now, but you get more pain later when you import inflation. You're going to import more inflation as the currency gets weaker. So you can have pain now or pain later, right? You pay me now or pay me later. And so everybody, India, the UK, Europe, South Africa, Latin America, right? Everybody is not raising interest. Japan, right, is not raising interest rates fast enough because they want to avoid the pain of slowing down their economies. And so their currencies are getting pounded. I think also something else is important here that is in the UK, where you're seeing the UK banks are getting killed right now. They're down 5, 6, 7%. This is Liz Truss's first week, really the first day on the job since, you know, the Queen's funeral. And it was a total flop. So this is a political question as well, where there's a big crisis of confidence in the new prime minister's plan on her first day in office, and the markets just, you know, fall apart. And so there's a political issue going on here as well. There's also the weekend rumor that Xi Jinping had been arrested and detained. And boy, oh boy, a lot of my clients all over the world were freaking out about this rumor that hit on Saturday and continued into last night. It seems to be completely false. But there are political elements here that are causing these moves, as your initial discussion talked about. You know, there's disruption in credit curves, in government bond curves, in equities, in other fixed income, right? It's a cross-asset disruption.
Paul, all of this, you know, pain now or pain later. I mean, the way to avoid pain would be if the U.S. were to back off, right? I mean, they just said, we're done enough and we'll see. But that ain't happening. We know that for sure now.
I know. You're right. I think that's right. I think I was having a client last night talking for 2 hours, and you know, he was saying that he's very, very sharp, one of the biggest funds in America. He was saying that internally they think the Fed is making a catastrophic mistake by tightening too much when all the forward indicators, you know, commodity prices, OIS curves are crashing, right? And so the Fed should be backing off, and they're not going to, because the Fed's credibility is on the line. The Fed cannot back off because of its credibility problem from not seeing this problem last year. So this is a real problem. I agree with you. I think the Fed's going to continue.
So again, just to kind of take that point forward, so where does this leave us in terms of global equity markets, and is this going to be a continued mini mayhem for some time, Paul?
Yeah, so like last time when I was on your show.
Yeah.
Well, we are in the last week in September up until the first 2 weeks of October is like notorious for crashes, right? The best time, this is like ground zero minefield for equity crashes, is the last week in September and the first couple of weeks in October. That's when they tend to happen. So I am not a fan of like bottom fishing right now. I think we have to get past this very treacherous seasonality as we move into, you know, well into the fourth quarter. So, and by the way, I was looking at all of your great little mini charts on subsectors. The technicals look awful. All these technicals are breaking down. It looks to me. I don't know. I'm not a fan right now.
Which ones in particular? Are you talking about sectoral charts? Or
Yeah, exactly. The financial services subsector in your chart looks like it's sort of falling apart and breaking down. So I don't think I'm a fan here. I mean, this is breaking the old lows. It looks like it's sort of forming a little bit of a head and shoulders. So gosh, I'm just not a fan here. And as we talked about last time I was on your show, I mean, India has kept its act together while Russia and China and South Africa and Brazil are all big messes. And so India was winning by default, when all around those, when you can keep your head, when all around you are losing theirs. India's done that. It's done a great job. But I think now we're talking about a global recession, right? A global reduction of money. And this is where India is hurting right now with the global sell-off. So I think India is vulnerable here. Yeah.
So when you say vulnerable, Paul, do you have any levels on the Nifty? Because we did test 16,978 on an intraday basis today. We managed to recover. But are we looking at levels on a sustainable basis below 17,000 now?
It seems to me that as we're going into October, I just think that we are in for I feel like there's pain coming because the Fed is not going to give in. Russia's closing its borders apparently on Wednesday. These coup rumors about Xi Jinping, which are total nonsense, don't go away. There's a lot of instability in the world, and I just don't see what's going to cause a sudden risk-on shift in sentiment right now. I don't know what that is. I can't see anything on the horizon. I hope I'm wrong, but I can't see what's on the horizon that will cause a shift in sentiment.
No, absolutely. But after September comes October, Paul, and we have elections in China, right?
Election, yeah, it's going to be a stamp, for Xi Jinping and real importantly, for the 5-year plan. And I think China's going to have to figure out what it wants to be as a domestic power, because its Belt and Road Initiative is kind of falling apart, and the technological blockade of China has been extremely effective. And so China's going to have to figure out what it wants to be. And I think Russia's, calamitous invasion of Ukraine is a disaster, a total disaster for Russia for the next 10 years. Russia has gone from being king on the chessboard to a pawn.
No, I asked you got that. No, I asked you the question about China because if they were to get sort of the stamp of approval as president for the third time, should we expect more of the same? It's a very large bloc, right, China? Growth has been slowing down, and that has got ramifications for so much else in the world. Will we see more of that pain, or can they turn around? You said, I don't see what can change very quickly. Can something happen there out of China, in your opinion? Or you think it's inevitable that there will be more slowdown, more pain? Yeah.
I think that we got a lot of good news in essentially the quantitative easing that was announced by China to mop up all of the real estate mess. And so China is going to be dealing with probably $400 to $500 billion real estate mess for the next couple of years. And so my take on that is very simple. It's going to be a huge debt for equity swap. There's going to be massive securitization in China. They're going to try to build a domestic yield curve. They're going to try to build a pension and an insurance market. This is really bad for equities because it means huge dilution. And so I think India will certainly outperform China because of this tremendous amount of securitization that's going to occur via the securitization of real estate assets.
Okay, well, Paul, that was actually my next question, but you answered it, that there is a possible relative outperformance for India, maybe a preference over China as well. Thanks, Paul. We're going to wrap it up on that note. Thanks very much for joining in with your opinion. On that note, it's also a wrap on this edition of the special show, Market Sell-Off. Thanks very much for watching.